I think in order to look forward, I look back at last week in Alphabet and the lessons learned, the questions that investors posed. And we've already talked about it in the show, but I think it's a question about for every dollar you put into AI infrastructure investment, how many dollars are you getting out in the near term for AI? Is that how you'd approach this week?
Yeah, I think that's going to be a key topic. We're not going to get a ton like out of Meta or Amazon, for example, in terms of what they're spending this year. People already generally kind of understand that. I think we're going to be looking at the marginal dollars, like you said. And I think what's interesting is, I think a quarter or two ago, people were very focused on specifically what AI was driving. But I think what we're learning more and more is that AI is really sort of integrating into these models. And so you can't unpack it, which is okay, because then we actually can evaluate the dollar growth in these companies and what is sort of justifying those CapEx investments.
There are things that are sort of idiosyncratic. In Meta's case, we kind of forget it's a massive portfolio of social media companies. But they, last quarter, told us about their plans for infrastructure. Which wins out? The forward-looking AI story or the backward-looking history of that company?
Oh, I think people are definitely going to be looking forward, right? The story will be the same. We'll look at the revenue trends and evaluate kind of what they're saying about the ad market and their products in particular. And then the focus on the call is going to shift to Mark talking about his vision for AI and trying to give people some comfort, I think, this quarter in again, why are they making such big investments where maybe we're going to see, maybe a little bit of sort of call it delayed gratification in terms of when we see those investments pay off, right? He used the word last quarter, multi-year investment cycle. That's a scary term for people. So we'll see what kind of performance he puts up on the call later this week.
For me, Brad, this is a week where being a CEO or a CFO, you kind of got to earn that pay packet. Do you know what I mean? That it comes down to communication at the end of the day. I found last quarter fascinating. How much kind of faith or credence do you put into the words spoken by the people at the top?
Yeah, I think they're a little bit different cases, right? We cover Meta and Amazon, so maybe I'll stick with my commentary there. In terms of Mark Zuckerberg and Meta, I think one of the adages we've heard lately is you want to buy Mark when he's feeling maybe a little bit more confident, and sell him when he's feeling buy him when he's feeling a little bit less confident, sell him when he's a little bit more confident. Last quarter, I think they're delivering such high growth. They were 27% growth last quarter, 22% this quarter. I think that felt a little bit tough, and obviously the stock sold off. Historically, I think you've seen that flip to the other side. So we'll see what kind of tone we get out of him here. But if he's basically talking to maybe more moderating growth rates and feeling a little bit better about those investments, that could be a positive sign. On Amazon's, it's I think much simpler. We expect Andy Jassy to come out with a very confident tone around AI. They're not going to get into the game of sort of promoting themselves or even speaking to how much AI is exactly contributing. But I do expect their commentary to remain very bullish on AI in general.
So that's an interesting point. What they said last quarter is that for AWS, revenue run rate 100 billion, but specifically for generative AI, revenue run rate in the billions, multi-billions of dollars. That seemed like enough. So if you don't expect them to kind of over-exaggerate or expand on that, what do they need to say this quarter to keep investors convinced?
Yeah, I think, previously I think they had been a little bit behind, certainly on just the acquisition of GPUs necessary to train up their models and their platform. So I think maybe giving a little bit more color on forward progress and aggression there will be super helpful. The other thing too is that, one of the things they emphasize is when they say things like multi-billion-dollar run rates for AI, they're really talking about broader AI, which they've been working on for years, very much predating the onset of generative AI last year. So again, it's a little bit hard to unpack, but that would be the general forward commentary, I would say.